With commerce comes risk, and where there is risk, there often comes insurance. A farmer will insure his tractor, a shipping company insures their cargo, you and I insure our homes, our cars, and our valuable goods. This does not eradicate risk, of course, but it spreads it out to make it more manageable in the event of a loss. Insurance is, and has been, a dull, ubiquitous part of financial life for hundreds of years. And also, for hundreds of years, another field of commerce that stood ubiquitous in the economies of Europe, Africa, and the Americas was referred to as the African trade, where, alongside such valuable goods as weapons, ivory, and gold, would be exchanged the most curious and disturbing cargo of all: humans. Within the system of legal chattel slavery that was practiced throughout the early modern and even into the modern era, the enslaved were not people being illegally trafficked, they were goods being imported and exported. And like any other valuable commodity, whether by their transporters, their merchants, their financiers, I suppose, or their owners, they would be insured. In this video, we're going to look at some of the different forms that slave insurance would take and how it got started as an industry. Then we'll discuss how it actually worked within the wider slaving economy and some of the implications thereof. As always, if you're interested in history and would like to continue your learning, I have a whole lot of primary sources on this topic and many others available to read via the digital library over at nativeoak.org. And of course, I'll be linking all of my sources for this specific video in the description below. Now we're going to have a quick little bit of comedic relief in the form of a sponsored ad. Really no way to segue into it with a topic like this, and then we will get into the much more depressing topic of the day. This video is sponsored by Exter.
Oh my, well that was quite a trip.
I'll say, it feels like we've been gone since, I don't know, January.
But where did the magic portal we went through on our last ad actually drop us?
You are arriving from Magic Time Portal, yes?
Well, yes, I suppose we...
Then welcoming to new and improved Exter sponsorship message. I am moderately sized Tom, here to introducing you to a new Exter Travel Pack Vacuum Kit. You can triple your packing space by easily compressing your clothing in carry-on size, anti-tear nylon, water and odor-proof vacuum pack bag. Simply pack it nice and full and use portable air pump to quickly and easily pull out all air, thus granting you up to 60% more space in your packings. If air pump run out of battery, simply recharge with USB and use any vacuum cleaner in meantime. That is ad. Any question? Wow, with my living on the road this year, I wish I had this much sooner. It looks like it's really going to save me a lot of effort in packing.
But hold on, isn't Extra a wallet company? I've always known them for their super slim, super sophisticated wallet with room for 12 cards, plus cash of course, and their iconic quick card access button.
Yes, that too. Exter also offers key cases and backpacks, and when...
Oh, I know this bit. And when you use my code, BrandonF10 at checkout, you'll even get an additional 10% off in addition to any other sales they have going on. And you can use my QR code or follow the link in the description to get yours today.
Yes.
Not much seems all that different in this alternate reality.
No, not really. Thank you to Exter for sponsoring this video, and now let us return to it. Part the first: life, liberty, and the creation of slave insurance. The concept of modern marine insurance began, as you might expect, in the earliest days of European global exploration, expansion, and trade. From the 15th century onwards, European ships were growing larger to carry more goods of increasing value across ever longer distances. As the empires grew, so too did their insurance industries, which in turn allowed for ever greater expansion through the security that they offered. In the early 18th century, only two companies were permitted to underwrite maritime insurance in Britain: the London Assurance Company and the Royal Exchange. But there also existed many smaller organizations, syndicates of individual entrepreneurs, bankers, merchants, and ship owners who cooperated amongst themselves to share risk on a smaller scale. They would often connect and meet with each other through local coffee shops, which soon became ad hoc centers for the arrangement and administration of all things maritime commerce, including the sale of insurance. You might have heard of one of these coffee shop exchanges. It was called Lloyd's Coffee House. Before YouTube, I should say, I was a claims adjuster for 6 miserable months. Long story short, Lloyd's of London, as it's now called, is a really big deal in the insurance world. Anyways, the market for maritime insurance significantly predated the rise of African slavery then, but as that dreaded institution expanded, so too did insurance for the African trade specifically come to dominate the market. From an article by Lloyd's itself about their specific history with the slave trade, quote, "The slave economy was one of the major markets for British marine insurance. Most of Britain's trade was with Europe, and the majority of policies by number were almost certainly for European and coastal voyages. But the premia were higher on long-distance voyages, those to Africa, the East Indies, and the Americas, so in financial terms, these lines of insurance predominated. The slave economy was clearly a principal feature in the British financial construct and by extension also significant to its marine insurers, which by the late 18th century represented over a third of all premium revenues within the Lloyd's framework, despite only representing 5 to 10% of actual policies. In short, slave insurance was big money." We'll get into some of the exact numbers in the next section of this video, but first it's important to point out that, though obviously a lot of this is going to vary based on time and place, the way that the policies, valuations, and treatment of slaves could vary pretty dramatically. Legally, they may have been considered property, but it wasn't like every European was just convinced that Africans were literal objects. Regardless of whether they were held to be morally equal, they were still known to be human beings. And that led to a lot of very interesting and rather strange, as you might imagine, social as well as legal and economic dynamics. In an online lecture that she gave for the University of Connecticut's Insurance Law Center, which again I'll link down below, Dr. Mallory Hope describes how the Roman Catholic Church was actually a major early opponent to the idea of insuring slaves. And this was because they considered it not a form of maritime or property insurance, right, insuring cargo, but it was a form of life insurance, which was both against Romanist teaching and outright illegal in many Roman Catholic countries, most notably in Spain and in France. The idea being that it was firstly impossible to place a monetary value on a human life, and secondly, that such policies would incentivize people to commit mortal sins, murder and suicide and whatnot. However, despite this outright ban on life insurance, still insurance agents would underwrite policies for slave cargoes on these transatlantic crossings. So, if life insurance was illegal, then how were they underwriting lives? Well, the way that they argued it was that they weren't. Instead, they took a rather ironic inspiration from another insurance industry called the Sklavenkasse, or slave fund, that was popular in a lot of German merchant cities like Lübeck and Hamburg. In the Mediterranean slave trade, wherein North African pirates would often seize European ships to either hold their crew and passengers for ransom, or, if the ransom wasn't paid, sell them into slavery, there was a whole market for insuring the liberty of those persons. If you're going on a voyage through, like along North Africa, and you get captured, the Berbers are demanding a ransom that you can't afford, well, if you had taken out the insurance for it from the slave funds, then that insurance policy would pay the price of the ransom for you. It's a similar idea here, just turned on its head. Insurance agents argued in this case that they weren't underwriting the life of the slave, but the value of their liberty. It's just that while the Sklavenkasse was there to allow clients to keep ownership of their own liberty, right? It's ensuring the value of my liberty if I take out the policy. Rather, the slave policies in this case were being written for the slave owners to keep possession of their property's liberty. As if The liberty itself of the person, rather than their humanity, was the commodity being bought and sold. The humanity was like an afterthought, right? Now, there are a lot of other arguments as well, of course, ranging in complexity and validity. That isn't to say that any of them were objectively valid, it's just that obviously some arguments were more heinous than others, is what I mean to say there. Including, of course, just outright that the Africans were just cargo and as such not subject to the life insurance laws. But the end result, right, of all this is that while there would be many different court cases arguing the exact legality of these slave insurance policies, ultimately, slave insurance was very big business even in those societies where there were legal hurdles to it and how exactly it was being applied. And speaking of how slave insurance was this weird sort of halfway point between life and property insurance, it's also important to note that policies weren't just being written in a maritime context. Of course, once a slave was landed and sold off, they still represented a valuable commodity and investment in which their owners were desirous to seek protection. Now, in some settings, like the West Indies throughout the 17th and 18th centuries, this wasn't as much the case because mortality rates were so high that the slave populations weren't even reproducing. Instead, it was just expected that the planters would get slaves off the boat, work them literally to death, and then buy new ones on the next shipment. Of course, the West Indies weren't a fun time for practically anyone who was there, and much the same could be said of the soldiers who were placed there on garrison. I have a whole series of West Indies videos if you're interested in learning more about all of that particular misery. But, you know, in that sort of environment, there isn't going to be much of a market for slave insurance because they weren't really a long-term asset to hold, horrifying as that may be to say. Rather, slave insurance in a longer-term ownership capacity, rather than maritime just moving them around, was much more significant in the United States, and it really took off after the slave trade itself was banned in the early 19th century, and the value of those domestic populations began to rise. Now, I specified the United States in this case rather than the North American colonies because it was only towards the end of the 18th century and the independent United States that we start to see insurance companies really rising up for domestic concerns like life insurance companies, fire insurance companies, rather than all of the big names focusing on international commerce. You know, it isn't like the British were just, oh, so abhorred by the idea of domestic slave insurance. It's just that, you know, they lost the colonies before this industry really got going. And obviously the North American colonies, the 13 colonies, were where most of the non-West Indies slaves were being held within the British system. But yes, just as you could take out insurance to protect the value of your property in the case of a fire, for example, you could take out insurance to protect the value of your property in the case of fire and in many other causes besides. One example, from around 1830 onwards, the Baltimore Life Insurance Company was one of the most successful insurers in all of Virginia, with slave insurance representing, at one point, nearly 2/3 of their new business. Baltimore Life enjoyed a near monopoly on offering slave policies until around the 1850s when the competition started to spread. And one of those competitors was the Richmond Fire Association, which by 1853 had underwritten some 1,700 policies. Again, it was a big business insuring slaves in the United States until around the 1860s. That's when it rapidly died off for, you know, some reason or another. So that's the basic idea behind slave insurance. But how did these policies actually work on the ground? Well, to answer that, we come to our part the second, premiums, coverages, and mortality, the function and working of slave insurance. The value of a slave can obviously be tricky to pin down, as so much was dependent on the individual person's sex, age, and health. There was also a great deal of variety in how those slaves were being employed and where. A young man of hardy constitution being purchased by a shoemaker to serve as his apprentice in Richmond, for example, is theoretically going to be far cheaper to insure than an old woman being worked to death on a cotton plantation in the deep South. All immoralities aside, one couldn't easily fix a precise value on human life, unlike an inanimate object. One article with the Encyclopedia Virginia describes how premium tables in the Victorian United States were mere guesswork, and how, quote, companies made up for this lack of knowledge by routinely charging double the rate quoted on white lives of the same age. For example, the premium of a 25-year-old enslaved person was $2 per $100 of insurance versus $1 on the corresponding white life. While Baltimore Life, one of those companies in question, initially was unwilling to insure enslaved people engaged in dangerous forms of labor, by the second half of the 1830s, it underwrote enslaved laborers engaged on steamboats for an additional $1 per $100 of insurance, and those employed in Richmond coal mines for $3 more. Markets can be fickle things, including, of course, the market in human lives. And the funny thing about humans is that, physically speaking, we're only appreciating assets for so long, especially if we are employed in hard physical labor or otherwise living in unhealthy conditions. The awkward thing, then, about that for the insurance companies was that it was remarkably easy for there to arise a situation where if you sign a policy for too long of a time period without accounting for natural depreciation, well, there could arise a situation where a slave was worth more dead than alive. As such, then, policies were typically being written for a short amount of time each, something like 2 to 7 years typically, so that the insurance companies could frequently be re-inspecting the slaves and making adjustments based on going market rates, the individual's health, what they're doing, things like that. Likewise, many companies had policies in place that they would only insure a slave if their owners didn't already have a policy out with another company. You couldn't get 3 insurance policies on one person, lose them somehow, and then collect on all 3 policies and make a tidy profit. That sort of thing they tried to avoid as much as they could. And overall, as well, the amount of coverage that was ever offered on a slave was typically a small portion of the slave's total value. The same article from earlier cites around 60% of the slave's value being insured, quoting one insurance agent as writing in the 1830s that the value of slaves is fluctuating. Besides, we like to leave no room for fraud. The implication of fraud, again in this context, is rather horrific, but it's also, I think, a topic for another day because it deserves a whole video on its own. So I've sort of been dancing around the issue. We'll be covering that in future content. For this, it's just covering the basis of how the insurance itself actually worked. Now, alongside the obvious questions of a slave's age and physical condition, as well as the fluctuations of the wider market dictating their premiums, insurers were also very keen to regulate the type of work that the slaves were doing. Higher premiums would be charged for those who were engaging in more dangerous tasks like mining, building railways, working on ships, or working as firemen. And if a slave was found to be engaging in work that wasn't specified within their policy, their owner's policy, then the policy could be voided. And this became especially significant and increasingly difficult to enforce, especially towards the latter days of, in this case, American slavery, as greater proportions of the slave populations weren't being employed directly by their own owners, but were instead hired out by them for contract work. And likewise, for larger plantations, insurance policies would look very, very different than for individual policies, which represented the majority of business for most insurers. The Virginia Encyclopedia article specifically mentions a bricklayer and a shoemaker who had taken out policies on their assistants. That sort of thing was far more common than a large-scale plantation owner having, individual policies for like 50 or 100 slaves. That was a very different picture overall. Returning briefly to maritime insurance and the transatlantic passage, a lot of those same concerns were present. Naturally, policies would specify what kinds of losses they would cover, not only to the ships but to their cargo. In the case of slaves, losses owing to the perils of the sea would typically be included, but curiously and frighteningly enough for, again, its implications, something like a natural death would not be including of malnutrition, nor would it be covered if a slave gave themselves up to despair, as one source quoted by Dr. Hope put it. However, in order to combat fraud, there tended to also be very specific clauses wherein it stated that a loss inflicted by a crew member would only be acceptable if through the suppression of revolt, where some quote-unquote losses were argued to be justifiable in acting to save the rest of the cargo. For example, in the case of water shortages or if a slave fell ill and it could spread, well, those lines could be blurred. For those of you in the know, we'll discuss the specific example of the slave ship Zong in a future video. At times, policies could also include, or specifically exclude, certain hazards on land, including slaves being stolen or otherwise lost to pillage while still on African soil, and even the need to ransom white sailors should they be taken by one enemy or another. Policies would also often include specific instructions on what specific goods merchants would be permitted to carry overall, where they were to be traded, and what route the ships were to take. In general, you could see merchants would push for these terms to be as liberal as possible, while the insurers wanted them to be nice and specific. One example of these conditions was informally laid out in a letter from Mr. John Smallwood to Captain Henry Baker in 1722, prior to the latter signing on with one of the former's insurance policies. "What Negroes you purchase, let them be fine young slaves, which you may sell to the Portuguese for gold at 5 to 6 ounces per head. Should it happen that you cannot dispose of your slaves to the Portuguese or others, you should be obliged to go to the West Indies. You are to be careful in the purchasing of your slaves that you buy 2/3 males. Let them be choice young Negroes, free from blemish, neither blind, deaf, dumb, or old, and that their provision be well boiled and in proper season, and that your seamen do not abuse or beat them. As there may be accidents and unforeseen occurrences that may attend the voyage, we leave all to your wise and prudent management. Send us an account of what mortality you have among your white men and Negroes from time to time, and we commit you to the protection of Almighty God." This letter was also quoted from Dr. Hope in her lecture, which again, if you're interested in the topic, I'd really recommend. It's a fascinating discussion, and she goes into a lot more detail about specific policies and their conditions. You'll find the lecture linked down below. And with that, we come to our conclusion. I think that one of the strangest things about this topic is that so many of the basic principles behind how this insurance operated are basically the exact same as what applies today to auto or home insurance. You know, like what I worked with when once upon a time I was a claims adjuster. It's all very cold, it's very calculated, and I mean, it's logical, right? The way that they did it makes sense financially. And that's part of what makes it so frightening, is that this particular evil is so benign feeling until you really think about the implications on the ground of what it means. It's very easy to discuss this kind of topic in a sanitary and detached kind of way. And I already know that a lot of people will be upset with how I handled this video, and they'll accuse me of exactly that, right? I'm too chipper while I talk about these things. But the thing about evil and injustice is that so often it is banal, it is mundane, it is found in the day-to-day operations of everyday people. And it's really hard to work up tears if I'm talking about insurance premia, right? Without getting into it, because it's a whole thing. I mean, a lot of us can understand, I think, today how easy it is to fall into these patterns of just accepting day-to-day injustices because it's all just so regular now, isn't it? But in any case, the topic of slave insurance is, I think, a fascinating and a curious one, specifically because it isn't bloody, usually. It isn't the sort of thing that you'll be taught about in school or see in a movie, because it is merely a consequence. It's small and technical and fastidious of a much larger and more visceral kind of terror. The slave ships, the whippings, the chains, the torture, and yet it's still so important to understand insurance in light of all those things, because much like the uniforms on a concentration camp prisoner, it represents a constituent part of the wider structure of those injustices and what makes them possible to begin with. It is frightening specifically because it feels so dull, and specifically because it's so easy to talk about in a detached way. And I appreciate your sticking around in this video to learn about it, and hope that the content here might inspire you to do even more learning on the topic on your own. Again, for which purposes there are a lot of different sources linked below, as well as the primary sources at nativeoak.org. Now, I know that it's a little incongruent, but still I do need to mention, for those of you who may be interested in it and may not have heard, that I have recently finished and published my first ever fiction novel called The Corpse War of 1793. It's written like a soldier's memoir from the time period. Think Rifleman Harris or Joseph Plum Martin. And it covers I'm trying to find a good picture here to show you, and it covers a zombie outbreak in England during that year. It goes from the initial outbreak with the reaction of this soldier and the garrison that he's a part of, and carries all the way through, let's see here, I've got a little guide for soldiers and musketry and what the different parts are and everything, of course. Yes, there we go, there's a nice title page to show you all. But it goes from the initial reaction of the soldier and his garrison to the initial outbreak. He's a part of fighting that outbreak. And then ultimately it winds up with a great big set-piece battle between the living and the dead. It's filled, as you saw, with tons of original artwork by the YouTuber Falcon's Fighter Tales. He does fantastic stuff. You want to check him out. And I've made it out to feel as authentic to the 18th century as I possibly could. If you enjoy World War Z and Sharp, then I think this is going to be right up your alley, and you can even read the first 3 chapters totally for free by visiting the store on my website, again, nativeoak.org. So thank you all so much for watching. Incidentally, 470-something pages. It's a big boy. Thank you all for watching, and especially to my supporters on Patreon, without whom this video would not have been possible, or any of my work for that matter. And until the next time, my dear viewer, I am and I shall remain your, I hope, most humble and, of course, obedient of servants.